I mean, the markets, they are back at record high, and what a start to FY25. By the way, April has been a historically positive one for our markets, and even if you look at the rally last year, the big rally only began from April. Can we repeat the feat this time around, Gaurang? Because the overall the setup looks very positive, or will sticky food inflation, the surge in crude oil prices and higher yields in the US, will they play a spoil sport?
Thank you, Suyash, and morning to all of you all, and season's greeting to all of you all as well. So if US has to throw a joker in terms of inflation numbers coming above the comfort limit, I think it is Mr. Powell and his team and the Americans who have to worry. To look at inflation over here, we are not going to go to US to buy a kg of rice or wheat, are we? So we are in a comfort zone, and I don't think we need to worry about it. Yeah, news flows from US will keep on bothering us and rest of the world, depending upon which way the news flow is. So I'm not really concerned about that. I'm concerned about the triggers that happens in our country. As you rightly mentioned, 5th April, Friday is the credit policy. Moreover, I think Suyash is going to be a status quo. Focus will be on the commentary from the Honorable RBI Governor in terms of when do we see that silver lining in terms of rate cut in case if he has to say anything. But knowing him, he's a man of few words when it comes to rate cuts. I think it's all data dependent. So we'll have to wait for the data to settle down and for the inflation to be in the comfort zone, elbow room, as we call it, for the rate cuts to happen. But second week onwards, I think earnings that could possibly give us some kind of sense of direction. Sectorally and company specific, you will see performance depending upon how the Q4 numbers unfold. And more than US, I think we have to look forward for the first phase of elections starting, kicking off 19th of April, if I'm not mistaken.
Right.
And I think, as I mentioned earlier, you have a long, elongated election period going up to 1st of June. And then 4th of June, you'll have the results of the elections that have underwent. So I think markets will be a little bit choppy. And, last April, we didn't have the election on the horizon. So to expect the similar reflection, I think it would be a little bit of expecting a little bit much more. I think let's go step by step, given the backdrop of events that are lined up.
Fair enough, sir. But speaking of the RBI policy meet, you pointed out that status quo is expected. I think markets will not be surprised by that answer. Most of us are expecting a status quo, but some are expecting a shift in stance. I mean, they are expecting, withdrawal, that withdrawal of accommodation stance to shift to perhaps a more neutral stance and, prepare that runway for rate cuts down the road. What do you think happens? When do you think that rate cut first happens? Do we wait till August or October until there is some visibility on the monsoon turnout as well?
So monsoon is going to be a little bit better than what we saw last time because of the forecast that has been given out. Normal to above normal is what the expectation is. I think it's a little bit early. A lot of things can happen in the high seas as far as the temperatures are concerned. But that's the comfort zone. And you know what, Suyash, I think even this time around, Mr. Powell said that there is a possibility of a rate cut 3 times this year.
Right.
He has not mentioned any date. He has not mentioned any time. He has not mentioned any quantum. But somehow the market experts start jumping in and saying, no, this is the rate cut that will happen. This is the rate cut. I mean, let's wait. And similarly, even for us, Suyash, I think a consistent downtick on the inflation has to be there before logically coming to a conclusion on the rate cut. You can't be doing flip and flop as far as rates cuts are concerned. I think it will not speak very wisely. So consistently, if you have month on month inflation number coming somewhere around 4 or sub 4%, which will take time from where we are right now. So I don't expect any announcement on the rate cut sooner. And like I said, don't expect the RBI, though there will be a lot of questions that will come to him as to when he'll announce the rate cuts. But as we know him, he's a man of very few words when it comes to these kind of statements. And like I said, it all is going to be data dependent, not 1-2 months, but consistently couple of months as far as inflationary numbers are concerned.
Good morning, Gaurang. Going by the expectations in the US Fed rate cuts, now their inflation is still far away from the 2% mark that they are targeting. And prices of commodities have more or less doubled in the last one and a half years. Do you think there is a chance that even in June, where all the analysts are expecting that there is a first rate cut, it does not happen because they are still far away from the target of 2% inflation?
And to add to what Amit is saying, I mean, Mr. Powell is sounding more and more dovish, but you know, there is a bit of a divergence that is playing out between other members and Mr. Powell. They are saying it will be prudent to perhaps wait and watch. Let's, wait. I mean, pretty much what you are saying, Gaurang.
Exactly. Why everybody wants to become Powell, yeah? I mean, let him do his job, yeah. Come on, I mean, we have to give it to him. Even over here, RBI has not spoken about it, Honorable Governor has not spoken about it, but people have started to jump to a conclusion that maybe before the monsoon, maybe if the forecast, like you rightly mentioned, if it is good. So, you know, in rate cuts, maybe word does not come in, Suyash. It has to be data and it has to be on paper, it has to be realistic. You can't be assuming something and cutting rugs, not only for us as a central bank, Reserve Bank of India, but any central bank in the world would not be maybe dependent and doing rate cuts. They will actually want the rate data to come through, not only for 1 month, but for a couple of months consistently, and then possibly we will hear. So let's be patient, Suyash. I think we've lived for so long with this kind of an interest rate scenario. What is the harm for giving it another couple of months?
Enough, sir. But, moving on from what the central banks around the world are going to do, let's look at, auto sales number, Amit. The numbers for the March auto sales number will start trickling in just about, a couple of hours from now. What are the expectations?
Okay, passenger vehicle growth has slowed down, but it's still good. Two-wheeler sales has done well, is doing well, and expectations are that the weakness is basically in the commercial vehicles segment. Now, I'll just take some time in this background that the numbers that we show, if we look at the PE ratio of Nifty Auto, the 5-year PE ratio median is more than the current PE ratio, and we put it, if we put it next to the weighted moving averages of the last 200 days, the auto stocks are trading above, much above the last 200 days weighted moving averages. Looking at the stocks themselves, like commercial vehicle stocks, Eicher Motors, Isuzu are the ones who have not done so well. Two-wheeler stocks, Hero Moto, Bajaj are doing well. Tata Motors, Maruti, M&M have exposure more or less everywhere apart from, but they are doing well. My question, sir, to Gaurang sir, two parts. First part, how do you look at the auto sector from here? Is it still wait and watch, considering that the PE ratio is much lesser currently than the 5-year median? So are the investors waiting and watching to basically jump in when the time is right? Is that the kind of phase we are going through in this sector?
No. As far as auto sector is concerned, we have already jumped. And we be positive on the auto sector right from the time that Chinese chip semiconductor issue was there. And the entire world thought that that is the end of the world for the auto sector. And we saw auto sector, auto index and auto stocks correcting 5-10%, Amit, at that point of time. So if we were positive and everything was, all doom and dusted, I don't see any reason why we have to be underweight right now. In fact, let me give a blanket disclosure. Other than Escorts Kubota, we positive on almost all the auto manufacturing companies, two-wheelers, three-wheelers, four-wheelers, commercial vehicle, tractor, agri equipment. Even something like Electra Green Tech, which is purely into EVs, we've been positive on that. You look at the number of launches, not only from overall, but even company specific. Tata Motors is going to launch somewhere around 4 new vehicles. A couple of them are going to be revived avatar of the existing models. A couple of them are going to be new launches of a very old model. I'm sure you must have heard about it. Tata Sumo is going to get launched in a new avatar, which used to be one of the kings of the road at that point of time. Similarly, you look at M&M, you look at Hyundai, though they are not the listed entities. You look at M&M, you look at two-wheelers. I think it's going to be an exciting time, and I'll go on one step further. Normally, I don't make any forward-looking statements, Amit. I think on the sectorial allocation, if I have to identify two sectors with, say, about a year, 2-year kind of time horizon, then that's going to be banking and finance and autos. I think these sectors are going to be looking very interesting in terms of earning visibility.
Gaurang, I wanted to pick your mind on the commercial vehicle section. Now, is the weakness due to the fact that the loans in this segment, especially tractors, are much dearer than passenger vehicle loans, probably because they are unsecured and they are for a longer period of time. Is that the reason why the commercial vehicle segment is slightly weak? The numbers are expected to be slightly weaker than the two-wheelers or the passenger vehicle segments.
So I think for the CV segment to pick up numbers month on month, Amit, it's going to take a while because we have to see the entire economy revive. Whether it is to do with mining, whether it is to do with construction equipment, whether it is to do with scrappage policy, or whether it is to do with any kind of government notification in terms of changes. So commercial vehicle will normally take a little bit more time, and I don't think it would be right to compare PVs and commercial vehicle in terms of pure apple to apple, because both of them are a different category of vehicles. So yes, but revival is there. I would not say that revival will not come through for CVs. It will come through, and that's one of the reasons why even names like Ashok Leyland, M&M, and Tata Motors, even Eicher Motors, which has a JV with Volvo, they have already started to work on the next generation commercial vehicle to hit the roads. And I think once we have clarity on green hydrogen, which is a possibility in maybe possibly another year and a half, I think you will have more enthusiasm for the CV segment.